please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Yes, the latest step in resolving the bad loan problem has come from the Sunil Mehta panel, which has recommended a five-pronged strategy to tackle this set of the stock of bad loans. The first recommendation, of course, is regarding smaller assets with exposure up to 50 crore rupees. Under this approach, banks will create focused verticals within their own banks for selling stressed assets in the SME space. The second part of the strategy focuses on mid-sized assets with exposure of 50 to 500 crore rupees. Here, the key element of the approach is financial institutions authorizing the lead bank to implement the resolution, and one hopes within 80 days. The third element, which is really the most important, focuses on stressed assets over 500 crore rupees. This envisages the creation of an asset management company. The fourth leg of the strategy is that has been recommended by the panel is using, of course, the NCLT in the IBC process, and that is for the very large loans. The fifth part is the creation of an asset trading platform. So that's a fairly comprehensive plan. Welcome to this special CNBC TV18 initiative, and joining me to discuss this is Mr. P.S. Jayakumar, Managing Director and CEO of Bank of Baroda. Mr. Jayakumar, thank you very much. Well, first up, if you can tell us, what is the financial interest in the AMC? Are you privy to, private equity funds or FIIs or anybody who is interested in funding the AMC?
So the AMC by itself requires, as you know, limited capital. So that's not really the point of discussion. The large part of the funds, I mean, all of the material funds is going to be raised in the AIF. So the issue then is whether the AIF will be able to raise the funds. Now, there has been discussions and testing of the market, if you will, and the response is reasonably positive. Therefore, on that ground, we feel that there is the ability to raise the funds for the AIF to then be able to buy out the assets. Now, this is an open architecture. It doesn't involve only one AMC, one AIF, so we expect that there will be several participation. Now that we have created a framework by which decisions can be done and a logical process of bringing it to the AMC, AIF to happen. So that really is what it is. So there is a fair amount of confidence the funding is available.
Okay, I'm sorry. I should have said how will the AIF be funded? Now, will BOB also be putting in some money in any of the AIFs?
So let me put it to you this way, that the bulk of the funds all money will be institutional money. We expect domestic funds to participate. We also expect foreign funds to participate. As far as individual banks are concerned, it's up to them. There are a set of extent rules on participation in AIF. And within the context and within the risk appetite, Bank of Baroda will certainly participate.
What is the corpus?
I don't want to get into the specifics of the amount. As these things roll out, we will know.
No, what is the corpus that is being envisaged for the first AIF? I mean, have the bankers concerned, Sunil Mehta and people like you and Rajnish, spoken to the funds? Are you looking at a 10,000 crore AIF, 20,000 crore AIF? Any ballpark number that you will first work with for the first AIF?
So, as I said, it's an open architecture. There will be participation by this particular AIF as well as with others. We will take it as it comes, but if you look at it from a theoretical standpoint of view, keeping the total size of the assets between the larger size assets that are concerned, which I think is about 3.1 lakh crores, and assuming a 40% valuation, 40% is the true fair value, we're looking at about 1.2 lakh crores. And this will come in stages, and again, I want to say that there's a fair amount of confidence that will happen.
Any timeline?
But specifically, are we going to start with 10 or 15? I think as we get to the drawing plan, we will do that.
Okay, so you envisage that it will be incorporated in the month of July itself, and a CEO or some lead management team will be ready?
Yes, we have to move fast on this. So I think the preparatory steps are underway, and we will be quick to market, quick to come to market. Now, whether it's July or August, we can work the details out. But very much there is a process underway, and I think now that the report has been accepted, or rather been discussed with the government, I think now it's time to move to the next block of action.
You don't have much time. The February 12th circular set the clock starting from March 1st. And by September 1st, if loans above 2,000 crore are not resolved,
Correct.
They have to be marched to the NCLT. You think a substantial part of these 2,000 crore plus loans will be marched into the AIF before September 1st?
I mean, the point is that to tackle the existing number, we have to come with a plan as early as possible and certainly have some action plan by end of August. But this is an ongoing issue. It's going to be an ongoing issue. I mean, it's not the end of it. I mean, we're going to have, as the businesses roll forward, as we go into future, we would still need this type of an institutional framework to deal with stress asset as a group. So I think it's both for the immediate as well as for the long term.
Okay.
Now, specifically, if you ask me whether all the assets will be provided for, I don't know, but we'll do our best.
Okay. You hope at least some of them will have entered the AIF by September 1st? I mean, or is there a plea to ask the Reserve Bank to push back the September 1 deadline by a bit?
Well, we'll take it as it comes. That's also, as of now, we have not depended upon any particular dispensation for our program to move forward, for this program to move forward. It is within the extent rules that we have currently, but we'll take it as it comes along.
Will your provisioning requirement fall at all? After the February 12th circulars, investors made some projections of the kind of provisioning PSU banks, in fact, corporate banks have to make. Does that change at all because of the AIF?
I think the average provision, including the TWO for the system, is around 55 to 57%. So an adequate amount of coverage of provision has already been made. Now, it would be asset specific how much more we would need, and that's a judgment we have to make. But what is pertinent to mention is because of the levels of provision that is already underway, we can today discuss of a program as the current one, which probably may not have been possible if you had looked at it, say, 24 months before or 12 months before.
Okay. Well, actually, about 3 years ago, Mrs. Bhattacharya was talking about a stressed assets fund as well, something which will not be government owned. So to that extent, the conversation is kind of a repeat. But let me come to the other bank-led, under 500 crore lead bank-led sale of assets. That one should take off quickly. Yeah. Can you update us on what has happened there?
Yes. So we are now working to get the intercredit agreement in place, and over the course of the next week, between now and, for the next 7 to 10 days, we'll try to get a closure on the ICA. Once the intercredited agreement is done, then that provides a logical framework for a lead bank to take responsibility for the resolution of that particular account. So the drafts are already there. It's now the discussions have started, and then it's a process that can be concluded quite early.
Okay. Actually, I'm still confused about the first step in the AIF process. Who incorporates it? Is it the Government of India that incorporates it? Will all the banks get together, set up a JV company in which each of you have probably 10% stake? What is the first legal step here, sir, in this AIF?
So, as far as the AMC is concerned, there is absolutely no government involvement of any sorts. Now, we're talking about a fairly small size capital for the AMC. So, the sense is, therefore, it should not be difficult to raise the fund. I think the larger question is the talent pool in the AMC and getting them. And getting quickly a quality team in place that can then help and roll out this process. I think that's a larger challenge than setting up the AMC or raising the 20 crores of capital or 10 crores of capital, whatever that initial number be.
No, I'm surprised why you're saying that capital is low. If you have to transfer GMR
somebody will roll.
suppose I have to transfer GMR Chhattisgarh or GMR Rajamundry or, you know, KSK Energy. These are all large companies. I mean, 6,000, 7,000 crore at least. So a capital of about 2,000-3,000 crore should be ready.
No,
Who incorporates that fund?
Okay, let me again clarify. There are two elements to it. There is an asset management company, which is fundamentally capital light. There is an AIF, which has a corpus of funds. So therefore, there are two different sets of fundraising as it is. You asked me the question relating to AMC. So I said it's not a very large amount. That ball can be set rolling. Now, as far as AIF is concerned, the expectation is domestic institutions will participate, and we probably will get foreign institutional investors are concerned. As far as the first tranche is concerned, there is reasonable conviction we can raise that kind of funds.
Okay. Okay, so what you envisage is that if 10 banks have loans to, say, GMR Chhattisgarh or GMR Rajamundry or some GVK airport, you all transfer the asset to the AMC and the AMC runs it, but in your books you all would have provided for it. Is that the way we should understand it? No, the way, okay, let me try to explain it the way it is. See, there is the AMC, which is, and ARC, which are the management part of it. There is a fund that holds the asset. So the assumption is that, I mean, not the assumption, the plan is that whichever assets are there, it is an open architecture, many people can bid for it, and whoever bids for it the best would end up buying the asset. Okay.
But whoever takes it will pay the cash amount for settlement. There are that would be settled in 60 days' time. That's what we envisage. So the transfer of assets will take place and the banks will get the funding, and so the transactions will get completed. Now, if there are some deep discount bonds that are going to mature, or there are going to be some instrumentalities by which the banks will get upside, then those will happen at that point of time. But what is envisaged is a pure settlement by cash. So the books, the balance sheet assets go off the balance sheet, the cash amount is received, and whatever additional provisions that need to be taken are taken.
Okay. No, I mean...
Or conversely, if you have release of provision, that could also happen.
Okay. And you expect that some
so
of the
your
assets...
concern really is who's going to put the money in AIF.
Yeah, where is the cash coming from?
There are investors... both domestic and international. Banks can also participate, but it's not expected the banks are going to fund this. And there is a cap, I think about 10% banks can participate in any AIF. Within that scheme of things, some banks will participate. Those who participate get the upside on the asset as they get sorted out, right? And so there will be some bank participation, there will be other domestic institution participation, there will be other forms of private participation, there will be investors coming in. But what we also envisage is other ARCs will team up in a similar manner and raise adequate amount of funding for them to operate. So in essence, it is not one AIF, but multiplicity of AIF. There could be sector-based AIF. So all of that will come in. So if you ask, that's the way it will roll out. Okay.
When is the first asset likely to be sold? Since there are several 2,000 crore rupee assets. When is the first asset likely to be off your books to AIF or ARC?
Your question is what's the time or the specific asset
what is the
you're
time?
talking about?
Approximately when will the first deal get done?
As far as specific assets are concerned, that would depend upon bank. Just going back to your point, we need to do something by August.
Okay. So
right, unless we get some special dispensation, as you said, for stretching the time. But that's the time message.
Okay, then we have to take stock of the situation within 2 months. Mr. Jayakumar, pleasure speaking with you. Thank you very much for taking time to clarify our doubts on this new architecture put out. Okay, so that's the key point that Mr. Jayakumar is making, that, we have to first find the money for an AIF. The AMC will not require too much of funding because it is only an asset manager, but the fund itself has to be incorporated. They are hopeful that a lot of private funds will come. In a bit, we will speak to some of the fund managers and ask them if they would be interested. We're going into a break, back in a jiffy. Welcome back. You're watching Breaking Bad Debt, our special coverage of the new plan that is getting ready to fight NPAs. We were speaking to P.S. Jayakumar, the MD and CEO of Bank of Baroda, who was a key member of the panel. And Jayakumar was just telling us that it's not just 2 months within which the AIF has to buy. The AIF, he was telling us later, could also buy a bid in the NCLT to buy distressed assets. But how long will it take to put together an alternate investment fund? As I was saying, the NIIF for the last 4 years has not made any investment. As well, an AMC, how well will it work? Can all the sellers aggregate and all the buyers aggregate that easily? To discuss this, we are joined by now more the private sector participants, Jayesh Mehta, Managing Director and Country Treasurer at Bank of America Merrill Lynch, Abhizar Devanji, National Leader, Financial Services at EY, and Chairman of Edelweiss ARC, CB Anthony, also being joined by B.V. Krishnan, CEO of KKR India Financial Services. Gentlemen, thank you very much for joining us. Krishnan, I'm starting with you because everyone wants you to join the fund. Will KKR be willing to put in some money in the AIF?
Yeah, hi, Lata. Look, a good question. I think the question is obviously not only for us, but for the broader market on the private sector on whether this is an interesting structure and an opportunity. I think as we all agree, the NPL's opportunity obviously exists. I think the structure which is proposed, which is you create a fund, the fund picks up assets, quote unquote, at the right price, is actually able to resolve nurse companies, make upsides. And if banks are participants in the AIF as investors and LPs, they benefit from the upside. I think that construct makes a lot of sense.
Okay.
The proof of the concept, though, will really come up when we think about what is the right price and how do you discover it. That's the first question. And what is the process that precedes even the price discovery in terms of creating the right data room, the amount of information needed for due diligence. So you're actually able to make a fair price. And that is necessary because if you do not have sufficient information, the buyers will always try to bid lower because they do not have sufficient info.
Okay, Krishnan, 1 minute. Just before we started chatting in the break, CB Anthony and Abhizar were telling me that they have been doing roadshows to try and raise funds for the Edelweiss fund, but it's not been very easy to make funds bite. CB, what has been the experience? If assuming the government sets up a sponsor, I don't know what the first step will be, assuming two banks get together, put a JV and a sponsor, what will the funds demand? How easy or difficult will it be to get a fund to invest?
See, any fund look for return. See, all over the world, I mean, if you look at distressed asset, is a risky
No, it's
area.
high risk, high return.
High return. So they look for high return. In dollar terms, every sovereign fund, every pension fund looks for maybe 15–16% dollar return, which means you need to make around 22 to 24% gross return here.
Okay.
Okay, so
what is your best guess that this AIF of the banks of India will be able to raise money?
If you want to raise foreign funds like pension funds or sovereign funds, it would take 6 to 9 to 12 months easily. Easily.
Okay. Jayesh, when we spoke to you earlier in the morning, you were talking about some tax issues also, right? There's a tax expert who had written to me saying that this alternate investment funds does not enjoy tax pass-through treatment under the income tax on business income. It is limited to only capital gains and other income. Will these be issues? I don't understand them very clearly, but will this be a big hindrance?
No, that is secondary. I would say I think the whole construct is good because I think today the decision making was told by the banks. That will, at least with this structure, that is the number 3 AMC and the number 4 the trading platform, that will at least resolve that. I think there are two kind of investors which we are looking at. If we are looking at purely only sovereign fund, then we are narrowing our stuff to limited investors from the offshore.
No, I don't think they have said sovereign funds, right? I think they will ask even KKR, for instance.
Yeah, but then a lot of these sovereign funds also put into fund managers, right? So when the fund managers are putting it, when they are managing distressed asset, they would like to do their due diligence. They would like to cherry pick the asset. They would like to, it's like, it's just giving an example of equity, right? The fund manager would like to manage his own portfolio rather than giving it to fund manager who is managing here and he decides the funds to be bought. So I think that second part needs to be streamlined a lot. We still need to see the detail.
Okay.
But that second part is very, very important.
What is your sense, Krishnan? Would KKR rather manage their own, have a bilateral deal with some of the banks, rather than allow some other fund manager to manage your money?
Yeah, I think the questions, Lata, are kind of slightly different in the sense that the first thing is, why do banks need to be the sponsor or manager or create an AMC on their own? There are enough funds out there at the margin, right? So, for example, can KKR set up a fund specifically for India as needed with exactly the same construct? The answer is probably yes. The question, therefore, to your point, is really not whether we will give money out to another AMC, but really why do banks, as you rightly pointed out, NIIF for the last 4 years has not necessarily gotten a lot of traction. Part of the reason is questions around what is the exact governance structure for a fund like this. So if it is truly meant to be managed by private sector, let the private sector do that. Let the banks be LPs and investors so they can benefit from the upside, but leave it to the private sector to manage, resolve, nurse, and make real equity from the investment.
Krishnan, I think they waited 4 years to see why all these vulture funds are not buying assets. We have not seen any deals. 3 years ago, I have heard the same language with Arundhati Bhattacharya and Sanjay Nair in this very same studio. But, nothing has happened. Private funds, vulture funds have not come and bought, nor have banks approached them. So maybe the government is trying to pay catalyst. You tell me, Abizar, what should be the first step? So far, we have not seen any one asset being sold to any vulture fund. The banks have not got together, nor have they done it bilaterally. What is your sense? First, tell me, what will be the first step? Who will sponsor this AIF?
There are 2-3 things which have impacted. Yeah, so there are 2-3 things. So who will sponsor this AIF? I think it has to be outside funds who need to come in. Because I think why outside funds need to come in is because they need to authenticate and have a right pricing. So let me just step back and say, why have deals not happened? And maybe you will find some of the answers in the current Shashak structure. 3 issues, in my opinion, have impacted bad loans not being sold in the economy. One is, and the biggest problem, is aggregation. We've never been able to sell debts in the aggregate. We've always had individual banks having their own nuances, whether it is 60 by 50, whether it is 100%, whether it's whatever. We've never had all the banks vote in unison. That's one. Secondly, we've never had the kind of processes that we have had where people can trust a particular process and say that this process will eventually come out with an outcome. As in, they would spend 6 months, 8 months on a deal with no surety of an outcome. And that, frankly, makes people wary of investing time. And lastly, is the fact that, let's admit it, we have limited skill in the game. Our current custodians of these bad assets do not have the ability to maximize their own returns, because we've never faced a situation of this magnitude in our country before. So if you put these 3 things together, and I'm leaving aside the usual CVC, CBI kind of arguments. I'm saying if you just get these 3 things on the right platform, we should be able to manage better.
No, I've still not understood. I have not still understood what will be the...
Who will invest, who will not invest, and how long will it take?
Abizar, I have still not understood who will make the first move to set up the AIF.
So I think the banks who are the holders of the assets have to collectively make this move. Whatever was envisaged, I was involved a little bit in the preparation of this. What's envisaged is that this structure will not be a government structure. It will be like the NIIF, an independent structure. It will have the investors having their own investment committee, which is obviously external capital, who will then make sure that the pricing that this particular AMC comes up with is realistic and offers as a floor to enable others to bid for these assets. Now, I agree there's a disconnect on the timing that it will take for it, but I do believe that it will take lesser than what the private sector takes to raise money. It will be quicker than that. And also, what is
But where is the asset getting aggregated? You have still not answered.
India today,
that aggregates the buyers. How does it aggregate the sellers?
The asset aggregation will happen via a mandate to the AMC. So the 200 accounts will be mandated to the AMC in terms of running a process, and that is where all the banks will have to agree. And that agreement, I think, is going to be coming about because there is a platform in existence. Don't worry, don't forget, in India, if there is an institutional platform available, sponsored by the government or with the permission of the government, I think there is a lot of buy-in to agree to that process. You know, so we don't want to go and clog the NCLT with everything. And that is a platform which can also offer aggregation.
Okay. Okay, Krishnan.
Well, it's a try.
Krishnan, quick thoughts on this.
For a lack of a better solution.
Krishnan, quick thoughts on this. Do you think the sellers of the assets will aggregate it with the AMC and the buyers will aggregate themselves at the AIF and the deal will happen? Any thoughts?
Look, I think this is, Lata, the first step of creating this structure and the construct is, I think, the right one. I do believe there will be more changes. It's not going to be straightforward. Will actually the sellers aggregate? They need to, but we'll have to see as we go along whether that process frankly works or not, right? If it works for one asset, I'd be very happy. And then raising money and aggregating more people to give in, more capital for it is far easier. So I personally think it's really down to execution on at least one or two assets. Otherwise, it's fantastic on paper in terms of the outcome of the structure. Not very easy preceding the outcome. What is the process? How do you aggregate? How do you find fair value? Is there still going to be more capital holes with banks? And how all of this, frankly, as it muddles through the next several months, how does it really help banks come back to lending? Because that was one of the objectives, right? If you do this asset by asset for even 200 accounts, that's a lot of accounts, a lot of banks, a lot of data to pull together, a lot of processes to run. In the meantime, the mid-market company in India still does not get money from banks, which is the issue. That's not exactly going to get solved overnight.
Oh, exactly. And it doesn't look like the AMC AIF process will also be put in so quickly that banks will, some bandwidth is released for banks to start lending. Or even for that matter, they get capital to growth capital. Several questions here. We are going to take a quick break and come back with our guests to discuss further what will be the hurdles and the potential success rate of the newly proposed AMC AIF model by the Sunil Mehta Committee. Welcome back to this special show. We have been discussing the end of NPAs, probably by setting up an alternate investment fund and an AMC. That is the plan put forward by the Sunil Mehta panel. The other plans, which of course that committee has said is an asset trading platform, NPA trading platform as well. We have to see how much of this is easily implementable. We have been speaking to Jayesh Mehta of Bank of America Merrill Lynch, Sibi Anthony of Edelweiss ARC, Abhizar Devanji of ENY India, and B.V. Krishnan, the CEO of KKR India. Well, now let me come to Jayesh again. Jayesh, a tax expert was telling me that AIFs can buy security receipts, but they cannot buy NPAs directly. Can you throw some light on this?
Yeah, so, just answering your first question, why things have not happened, and if you really look at foreigners have bought, but very few security receipts, it's only recent time. So A1 was a decision making by the selling banks, so that will get resolved, even the aggregator through the AMC. Now, if you really look at it, FPI, the foreigners or non-resident, their only way they can come through is by security, and that is security receipts. So therefore, you have to tie up with some local ARC, local situation, and that's what is a challenge, right? because a lot of this asset managers, I'm talking about global asset managers, they would like to manage it themselves directly and not somebody else managing for him. And the same thing is for AIF. AIF today can buy securities. So again, the challenge is some tweak in regulation is required even for local AIF to buy loan assignments, right? So right now, distress NPLs are being sold as loan assignments, which gets sold to an ARC, and then ARC needs to hold 15%, and then the balance 85% is distributed. So I think we want foreign investment, but we haven't made any proper, like if you look at dollar loans, right? Globally, dollar loans, when they get traded, distressed dollar loans, it's like, you know, there is a loan market agreement, the funds can directly buy the loans from the banks. So I think we don't have that format, and that's been a big restrictive challenge in a way.
The other worry I had was that the Reserve Bank's February 12th circular gives 2,000 crore plus assets only 6 months to be either resolved and if not resolved, taken to the NCLT. Abizar, how do you see this playing out? Within 2 months, I mean, I was asking Jayakumar that as well, can these assets be bought, or do you think they have to go to NCLT and this AIF will be one of the bidders in the NCLT?
So I personally think that the AIF being one of the bidders in the NCLT is something which may beat the purpose of this whole AIF or AMC business. I think there will have to be some extension to the 12th February. It's too close. It's 27th of August is the last day, by the way.
Yeah.
So it's going to be too close for anybody to do anything meaningful, frankly.
Okay.
So I personally think that there has to be an extension to that deadline.
Okay. Of what, 6 months, 3 months?
Possibly 6 months.
Okay. Well, Sibi, what's your sense about whether the AIF plan works? We are agreed that maybe 4 banks, the 4 top PSU banks, get together and put in a company which they sponsor, which goes around asking for funds.
Yes.
Is that the way you expect this to start?
It's the way AIF works. One has to sponsor the AIF.
Okay.
Then you
but
need
the foreign funds, Jayesh is saying, will participate through a local ARC.
No, AIF can be set up by anybody.
Yes.
You put 2.5% your contribution and you set up an AIF.
Okay.
Which SEBI is the regulatory that. Once that is set up, you need to market the fund. That market, you should get subscribers to that fund.
Okay.
We are not talking of small amounts. We are talking of thousands of crore if we want to resolve these cases. So the 2.5, the sponsor subscription itself is going to be high.
Yes, it has to be. But maybe they are looking at several funds. If assuming that they set up a power fund, since most of them are power assets, would that be an easy way to work?
But there are some covenants in the AIF also.
Okay.
An AIF cannot invest more than 25% in one asset.
Okay.
So that restriction also you should keep in mind.
Oh, is that?
Yes.
Krishnan, anything you want to contribute? Do you think if there is a fund sponsored by, say, 4 or 5 PSU banks, they will be able to attract foreign funds to it? Or do you think, as Jayesh says, there will be, other problems that they will be they cannot buy NPAs directly, so they will have to operate through a local ARC?
Yeah, so a couple of things. One is to your previous question on the NCLT and AIFs participating in that. I don't think that's really a wrong thing at the margin.
Okay.
See, in a lot of jurisdictions, as you know, what happens really is pre-packaged transactions, and ultimately creditors do credit bids as well to buy assets. And the process of NCLT does help you cleanse a company completely of other liabilities, which for any distressed situation is pretty decidable at the end of the day. So it's not necessarily wrong for this AIF or any other AIF to go and bid through an NCLT process itself. I agree the time frame presently that's left is too short. But be that as it may, I think if ultimately in an NCLT or outside of it, if there is a right process to collect data, present it for someone who can actually diligence and bid, it could still fundamentally work.
Well,
So
we have
that's on
done
the
about
previous
12
question.
cases in IBC reasonably well, big ones. So I guess some dimensions on data have been laid
Yes.
for the moment. So maybe that should succeed. Abizar, since you were present at the creation, as it were, what exactly is the logic? The banks transfer their funds to the AMC, which gives them SRs, and the SRs, security receipts, have to be liquidated in 60 days. Isn't that 60 days a bit ambitious? Are they sure they will find buyers?
Yeah. No, so they will. So the idea was that if there is enough diligence done, or some level of diligence done, which enables an AIF investor to actually place a value for that asset, it will actually subscribe for and take 15% of that company by way of SRs. So that is basically establishing and writing up a floor. The plan was that based on this floor, then you actually run a Swiss auction. Now you could run it inside or outside of an NCLT, that's fine, but you run a Swiss auction. And by way of the Swiss auction, then others, including the existing investors of the AIF, can actually bid for those assets. And then they bid for the assets, and under a Swiss auction, you will then establish a floor price and you move on. And the highest bidder will obviously win it after the ROFR has been exercised. Now, if there is no bidder, then the backstop is the AIF of the AMC, which will pick up an asset. So the structure is very different, and maybe we have less time to discuss that structure. But the structure is that the AIF effectively creates a credible floor in case there is no bidder. It's not the intent of the AIF to pick up every asset for price.
But then
it's a very different approach.
It is very crucial that
approach. It's a skill set approach.
Yeah, but that means it's entirely contingent on an AIF getting created with substantial amount of money.
With not that substantial amount of money, if you, as Krishnan rightly said, if you try and do it with 1 or 2 assets, even with a less amount of money, try it. I think once the system works, you will find a lot more coming to it.
Okay.
But I think we have to have this initial kind of proof of concept with the first 1 or 2 cases.
Yeah, you were saying,
Krishnan? Question, as you rightly asked, Lata, the one is the capital, right? Which I think, as Abhijit said, I'm sure it can come if a few assets work. The second part of it is really, it should not end up being a perverse situation where this becomes the investor of the last resort because nobody else bids, right? So which again the question is, how do you discover fair price? And at that fair price, are banks happy to take a haircut? Is there sufficient capital to recapitalize them? And how do you even determine that fair price from an AIF's perspective? I think those are the key questions. And obviously that can't get sorted in 2 months because there are 200 assets or something like that, right? So it's going to take time. So it comes back to my mind really to the process that precedes the creation of the fund. That for each asset, what is the process you're going to run? Who will compile the data as typically a banker would do, and invite real bids and be able to get folks' attention.
Yeah, I mean, this is interesting. How will the AIF arrive at a fair price? CB?
No, it has to. It's very clearly mentioned it will be an auction process, and everyone can take part in that. Even existing ARCs, distressed asset funds, everyone can take part in that auction process.
And then you arrive at a fair price, then put forward 15%, and then allow others to buy it. Yeah, Abhijit?
Lata, there's a difference between a floor price and a fair price. A floor price is something that the AMC in conjunction with the AIF will establish. And then that will be put to, as CB says, a Swiss auction process, which will then establish the fair price.
All right. Very quickly, I want all of you to give me monosyllabic answers. When do you think the AIF will be set up, CB Anthony?
It'll take around 9 months.
Okay, no, to start.
To start?
Yeah, I mean, for the seed fund?
I thought by around 3 months.
That should take 3 months. When do you think the first sale will happen, Abhijit?
In the next month.
Okay, you expect one of the assets to be sold?
I think the AIF will be set up in a month.
Okay, AIF will be set up in a month, but when will the first sale, one transaction happen?
It will commence in a month.
Okay. All right, Jayesh.
It will commence.
Okay.
So I think another 2 months.
When do you think the first transaction will happen with one power plant sold off from the banks?
No, so it is happening. So that is happening as of today also. Right now,
no, I mean through the AIF and the AMC.
Yeah, that's Yeah, that's a different set of investors. You know, we are restricting the overall bidding. If we are going through AIF process, then we are restricting to the people who set up in India. So that's where we are restricting it. So that's something we need to talk further on.
Oh, okay. Krishnan, what's your guess? What could be the size of the first AIF? Say, if we were to meet in October, 1 quarter down, would we have been able to put together an AIF of 20,000-30,000 crores?
Look, I think there is significant attention, intent from the government, from everybody to get this going, right? So my suspicion would be, to Abizar's point, that within the next 30 to 60 days, you'll have a filed, approved AIF.
Okay.
You would probably see at least one transaction, if not two, go through within the next 60 days.
Okay.
I would suspect that they will target to raise at least $1 billion initially, and then scale it from there. That would be my guess.
You know, if this works, I would still think that this is a very good start to a process that we've all been waiting for. Abizar, Sibi Anthony, Jayesh Mehta and B.V. Krishnan, thank you very much for joining me in this conversation.
Thanks, Lata.